Well, I want to thank you, everybody, with joining us. We are here with Wall Street Silver on the Reddit community. We have an incredibly special guest, David Tice. Everybody, David, how are you doing today?
Doing great, thank you.
Awesome, awesome. So we're just going to start off with some questions from the Reddit community. We have Lee Justo and Jim Lewis with us from Wall Street Silver. So Lee, you want to start it off?
Sure. David, I had met you back at your famous seminar. I think that was what, 1998 or 99, back during the
internet September 21st, 1999.
99. Okay. Boy, you were a bit early with the shorting of the market, but from what I've read is you actually credit precious metals as kind of a life preserver for the fund at points. Is that correct?
Yes. So I ran the Prudent Bear Fund between 1996 to 2008. And, the key thing in a bear fund is try to lose as little money as possible in market rallies. And when you have fiat money and you have the Federal Reserve printing money and buying back treasuries, et cetera, it can make stock prices levitate. And so I figured out to own precious metals equities inside the fund was a great hedge, and it really helped us outperform, the inverse of the market for the 10 years.
Those were very difficult times back then to be a short seller. So
yeah, they really were. Although I'd say they're even more difficult today. There's lots of people, squeezing shorts. So
I was actually going to ask you that question because there are a lot of similarities in my view to the market today than it was back then. I mean, do you see the market continuing to blow off and go like a Super Bowl, or do you think that we're kind of coming to the end of the cycle? And if which other way, how are you preparing your investments for that?
So we do believe this is another bubble, and as you said, I called the bubble back in for 2000 and also 2008, and I ran a bear fund at those two junctures, and I tended to be early. And a lot of times bears who follow the Austrian School of Economics tend to be early, but they get it right. And frankly, I believe that now we are about to come into another bear market cycle that's going to be lengthy. And you look at a lot of luminaries such as David Rosenberg and Stan Druckenmiller and Jeremy Grantham and Jeff Gundlach, and they're all saying the same thing. And we now have a Biden administration that is less capitalist oriented, and we're at a very, very high valuation with record levels of debt. And therefore, I think it's going to be bad for the U.S. economy and for financial markets generally.
Well, Mr. Tice, Jim Lewis here. Thank you for joining us. One of the questions my Redditors asked me to get you on is, you became very well known back when you were running the Prudent Bear Fund, and that was, but you left you sold the Prudent Bear Fund at some point around the last great financial crisis, I think 2008, 2009 timeframe. And then you moved on into making movies for a period in your life.
Nice.
Is the current market what brought you back into investing, where you thought that this is a prime opportunity for your thesis? What brought you back from the movie business, so to speak?
Well, the movie business was just a slight foray for a while, and I'm still involved to a degree. I'm working on a documentary that I think is very important right now. I'll tell you guys a little bit about later, but I was a hibernating bear certainly for a while, and saw the market rally dramatically after 08, with the Federal Reserve buying back treasuries like we've never seen, and record amounts of debt. Now we're throwing trillions of dollars around like we used to throw around billions. And so I did see an opportunity, and I saw an opportunity in precious metals. And in fact, I like precious metals even more so than I like short selling, because short selling is a very tough game, and you can make a lot of money when the market declines. But as long as the market goes up, you can have your head handed to you.
I-
And
Oh, go ahead. I'm sorry, I didn't mean to interrupt you.
no, that's right. But precious metals, as we talked about earlier, were a key component of the prudent bear fund strategy. And there are periods, the 1930s, the 1970s, and the 00s that were amazingly strong secular bull markets. And I know you guys have had Rick Rule on. He's a friend and an idol of mine, and everybody should look up to him as far as his acumen in the precious metals, mining equity history. And, he believes strongly that this is the next boom and it's going to last for a while.
Ivan, do you have another question from our Redditors?
Yes. So we have a question from our Redditor here, David. What was your biggest inspiration when you first started?
I'd say I wanted to protect the little guy, and frankly, the big guys had hedge funds, and they could be long and short, and frankly, they didn't have a vehicle to be short, and therefore, that's one of the reasons I started the Prudent Bear Fund. The other thing I saw was I started a research publication entitled Behind the Numbers, and we provided sell recommendations. And, by the reason I did that is I felt that 99% of all recommendations coming from Wall Street were all buy recommendations, telling people what to buy. And frankly, sometimes those equity recommendations ended up being shields for companies because, investment banking fees dwarfed, what commissions were. And I felt like individuals and institutions needed to see the other side. And therefore, I'm from Independence, Missouri, home of Harry Truman, so I'm fiercely independent, and I'm all about fairness and want there to be, understanding on both sides where people make up their own mind if they want to go long or short. But, there needs to be, solid information available.
That's what a good answer. What was your first job, if you don't mind me asking?
So I actually worked at Sizzler Steakhouse as
Oh, no way.
a busboy.
I was Burger King as my first job when I was 16, so I feel you there.
Nice.
So I have kind of a funny story. One of my first tasks at night was to take 3 ketchup bottles and pour the 2 into 1 in order to conserve the ketchup. And then so I've always remembered that. But then remember about 10 years ago, we ended up, changing shampoo, ketchup, mayonnaise. You end up having it like this. And suddenly probably a smart 22-year-old MBA came into the Heinz, office one day and say, why don't we turn the ketchup bottles like this?
Yep.
Because of gravity, obviously.
Yeah.
And so I always like to use that example that we all need to think outside the box and that, challenge conventional wisdom.
I wonder if they patented that, turning the ketchup bottle upside down, because that's brilliant.
Yeah. But how many decades did we do it a certain way? So therefore, I think we all need to challenge ourselves to, think outside the box and challenge conventional wisdom.
Perfect. Now, Lee, do you have another question?
I certainly do. I'd like to ask Mr. Tice about his new ventures. I know you're involved with Ranger Equity, which is a short ETF, and you also have your own firm as well. Is that correct?
Yes. So Tice Capital is a family office. I'm also involved with a RIA where I have a partner in Atlanta. It's Moran Tice Capital Management, and we manage funds, precious metals, equities, as well as a individual fund. And we started that about, I joined about a year ago, and I'm so excited about precious metals equities and the valuations of these companies and the opportunity that we have with gold and silver rising in price, given this unprecedented fiscal and monetary, lack of discipline. And we're going to see gold and silver go up dramatically, yet these equities are selling at incredibly and historically unprecedented prices compared to the S&P and compared to the gold and silver price. And so our portfolio is selling for about 8.5 times 2021 earnings, and the growth rate of our producers is in the 20% range. And therefore, there's just a phenomenal opportunity. And Rick Rule, in his interview with you guys, utilized this statistic that if you look at all U.S. wealth, that the percentage of precious metals and precious metals equities amounts to about 0.5%, where the 3-decade average is between 1.5% to 2%. And therefore, the amount of additional exposure that individuals are going to get to precious metals, equities, and gold is going to be astounding, and it's going to result in higher prices. So taking that back to the Reddit community, I've done some research in the past about, the Robinhood, community and how little ownership they have in gold and silver stocks, and it's really anemic. And that's why my hat goes off to you guys at Wall Street Silver and what you guys are doing Wall Street Bets to move over from just the buying traditional equities like you did in GameStop and moving over to silver, because this is simply brilliant and it's going to work out very, very well for your individual investors.
Have you been surprised that we seem fundamentally, we seem to be seeing all this crazy debt. There's so many signs of inflation. We all seem to understand CPI is fake and there is real inflation out there. But at the same time, gold and silver don't seem to be behaving like we would traditionally expect it to behave. Have you been surprised by that? Do you think it's partially Bitcoin related enthusiasm? What's your thoughts on why gold and silver are not behaving as we would expect?
Well, silver was still the best performing metal in 2020, and gold still had a great year. Here we are at 1695 or so. It's up a lot from where we were a year and 18 months ago. And we know that these markets go, with a big rally and a correction and a further rally, et cetera. I do feel like there's some manipulation in the market. I'm a big fan of GATA, Bill Murphy. And I do feel as if this paper versus physical issue that we're going to talk about with PSLV and SLV also exists in the gold market. And therefore, powers that be do not want to see gold price go up a lot. And they just don't. And because they want to rely on the central bank, and gold represents an enemy of the central banks. And therefore it indicates a lack of confidence. And therefore, but gold's going to get going again. Silver's going to get going again. Silver still has had a nice run. This is the long haul. Rick Rule, I'd encourage people to watch your interview with him. And he talked about the fact that expectations sometimes just get too high. That, we think that, just gold's going to go to the moon just immediately. And I mean, it was still a good year in 2020. And
yeah, 70%. I tracked it since the Fed went to zero. Up 70%. We got nothing to complain about.
Yeah. and your first couple months of 2021 have been painful for gold stocks, but that just represents an opportunity.
Yeah.
And the Reddit community and the Wall Street Silver community has this phenomenal opportunity ahead of them with silver and silver stocks.
So you mentioned SLV versus PSLV, which is a topic that's very familiar in our community. Mm-hmm. What's your understanding about SLV in terms of, is it pure? There's a lot of doubts and question marks about how much silver they actually physically have title to versus whether it's leased or hypothecated silver. Do you have any thoughts on that issue?
Yes, I have a few thoughts, and I'll start that by saying I'm not a lawyer and I have not, gone through the prospectus in detail. But what I do know is that even in the prospectus, they talk about how it is set up to track the silver price, is what's talked about. And then also I know they recently amended the prospectus just in the last couple weeks, talking about the fact that they may have difficulty obtaining as much physical silver. So I'm a friend with Eric Sprott, and I'm a huge fan of Sprott Inc. and Sprott Wealth and Rick Rule again. And these guys are people of integrity. And Eric Sprott is a believer that there needed to be a vehicle that's a trust and a closed-end fund that just owns physical silver. And I trust Eric and the Sprott team, and therefore there's no way you should be buying, SLV when you have a chance to buy PSLV. And I think there will eventually be a reset between physical and paper. I'm also a huge fan of Andrew McGuire, and he does a great podcast called Inside the Vault, I think it is, every 2 weeks. And I'm going to be on that show, in fact, Wednesday.
Nice.
Well,
Oh, looking forward to it.
You should talk to him about Kinesis. He's got some interesting crypto backed precious metals ideas that we talked about when he was on board.
That
I'm
brings
familiar
up.
with Kinesis.
Go ahead, David.
Please.
I'm also, you were talking about my other interests. I'm actually on the board of advisors of another gold-backed cryptocurrency called Bullion, that's about ready to be launched in the United States that, frankly, I like better than Kinesis. But I think marrying cryptocurrency with gold, and we also have a silver product, makes a lot of sense. And so anyway, it's a wild world out there. A lot of money's going to be made and a lot of money's going to be lost, but people just need to invest in themselves, pay attention, and listen to shows like Wall Street Silver.
And David, you were a bull on crypto a number of years ago when most people who were into the precious metals community were kind of poo-pooing it and saying it's a bubble or whatever. So you were dead on with that. Would you like to talk about your current holdings in crypto? Are you still a believer in it other than the ones you're working on?
Well, inside our fund, we actually had a small position, which helped our performance in Bitcoin. But with Bitcoin having moved to 50,000, from this $3,000 base, and I'm a little bit worried about it longer term. And we know there's been some. The technology still, isn't great and all the bulls will even admit that. And we've seen some negative comments coming out of Janet Yellen and out of the BIS managing director. Just gave a speech in late January where he was talking about, all the issues with Bitcoin, and that he felt like central banks ought to be involved in their own government-sponsored, crypto. And if you know me at all, I'm an enemy of central banks. But
then you're a friend of Wall Street Silver.
Yeah, that's right.
Definitely. And we know that they don't want to, lose power, which Bitcoin can do. But then also the country of India their legislature is voting, about banning cryptocurrency, about banning Bitcoin. So I think there's some risk right now. And, another smart guy I've talked to has said that maybe Bitcoin could be like Netscape, and Netscape was eventually replaced. And even though none of us as libertarians and patriots are going to be for, central bank government issued, blockchain vehicles, the fact is they they do make the rules as far as what's legal and what's not. And therefore, if they feel like Bitcoin's getting too big for its britches and, providing problems to the deep state, they could still come along with the stroke of the pen and make it very difficult and, cause a lot of companies that have gotten engaged to, cause them to exit that market. And I think there's great risk there.
One of your recent interviews, you said you're expecting gold to catch up with Bitcoin. And I was just sort of wondering, would that be, I mean, it could work two ways, Bitcoin coming down to gold's price or gold's price coming up to Bitcoin's price or somewhere in the middle. Are you still a believer that gold's going to really catch up to Bitcoin after the huge run it's had the past few months, and why?
Yes, and I frankly think it'll be somewhat in the middle. I think Bitcoin is going to, have a bit of a short-term setback. Now, I wouldn't necessarily recommend to sell all your Bitcoin here because I think there is a potential for a, outsized return where it still could go to, 500,000 as an example. But I would say be prepared to lose all your money too. But if you have a chance at a 10-to-1 return, versus a minus 100%, that's still a, disproportionate return that potentially is worth a bet. I'm not smart enough to figure out exactly, nobody knows, what the government's going to do, what's going to happen. I know we have a fiat money environment. Those people that choose Bitcoin over gold, though, I will argue all day that, and I've said, having Bitcoin, especially when it was at 8,000, made some sense because of the asymmetric return potential. But there's no way it replaces gold because gold has finite supply. Gold has a 5,000-year history. It is backed where you can, put it in your pocket, but you don't have to put it in your pocket. You can still utilize the blockchain. And that's why I'm so excited about Bullion, because having a gold-backed stable coin makes a lot of sense. You still have that gold backing, but you have the advantage of being able to break it up into, 1,000th of an ounce of gold, et cetera. But gold has been around thousands of years. We've seen fiat money before. We've seen civilizations. You go back to Greece, you go back to Rome, you go back to, every fiat money has eventually gone to zero. And what happens is governments all want to provide a better standard of living for their constituents in order to stay in power. So what they do is they shave precious metals off the coinage, so that's happened. And so that's happening again through, quantitative easing and MPT. And so we've seen this movie before. So that's what's going on. Gold and silver will protect you. And therefore you've got to stay. In terms of catch up, I think that gold and silver, have a long Bitcoin price, like I said, from 3,000 to 50,000 is quite a move. I'm not saying that we get that large of a move in gold price, but I also follow Jim Rickards, and Jim Rickards talks a lot about a $10,000 to $15,000 gold price, and I think that's very, very possible based on where we were, where we are in terms of monetary policy today and money supply.
Well, with Basel III rules about to change, gold's actually becoming more important to central banks. It's being upgraded to a tier 1 asset, at some point in the next few months. And some people think that might be the next catalyst for gold. I don't know. Are you familiar with or have any opinion on the Basel III new rules changes?
No, I'm very familiar with it. And actually the date is June 28th. And, going from a tier 3 asset to a tier 1 asset is a huge development. And that means that banks can consider gold at the same level as, treasuries
Mhm.
or also cash in terms of collateral, for their lending. And I think this is a huge, potential move possible for the gold price. And I think it has been unrecognized. And I think that gold is going to do very, very, very well. And silver, let's talk about silver a little bit. The fact that I know Wall Street Silver was kind of founded with the idea that this paper versus physical. And, I've been talking about that for a long time with gold. And I think it exists with gold, but I think silver, the phenomena is even more pronounced. And you look at the magnitude of silver traded, in the paper market versus physical is somewhere between 500 times and 1,500 times. And it looked like the price of silver was going to take off, just a few weeks ago when Wall Street Silver and, the Reddit community, started to come into silver. And there's probably some, millennials and Robinhood investors that have been disappointed that it went to 30 and then it backed off to 27. Mm-hmm. So all I can say there is that this fight's not over. This game's not over. I think buying physical silver and buying PSLV, in lieu of SLV, is still going to be a great, great proposition. The gold to silver ratio is now at 67. I calculated it this morning, and it could easily go to the 15-20 range. And so silver is going to outperform gold. I think it's very likely that there could be a reset. Kyle Bass just tweeted, I think it was February 10th, about the fact that if very many owners of silver futures contracts chose to take delivery, that it could, create upheaval in the silver market and could cause force majeure, and it could cause the price of silver to be, reset. So I think there's, frankly, great deal of opportunity for profit for individuals to make money owning silver.
Lee, do you have another question?
Sure. Just to follow up on the silver miners, your background is heavily in accounting and kind of looking at financial shenanigans and the like. Do you think we had that bull market into gold and silver, and then we kind of had a bear market following that? Do you think that bear market kind of flushed out the weaker companies and forced all the other companies to kind of tighten their belts?
That's a big question. We had a long, bear market, and then especially in gold market equities, where, a lot of the smaller companies have been down 80, 90%. And frankly, gold stock, gold company managements ended up, not being very smart during the last boom, and they took on a lot of debt. I think they paid themselves too high salaries, and they ended up, not being that profitable. But in this, there was truly a great washout, and Rick Rule has talked a lot about that. And the stocks are still, far below where they were, at their highs. And there is a lot of bad companies were washed out. A lot of better companies were able to pick up assets on the cheap. The technology has gotten better and better, but we haven't ever seen a period where gold and silver mining companies have these kind of margins, where the all-in inclusive costs, I'll use gold, is about $1,000 an ounce. And even at $1,700 of realized gold price, we're talking about $700 of margin. And that's about 40% higher than the second highest margin that we've ever experienced with mining companies. Our portfolio is, littered with companies with 2 to 3% dividend yields. We now have, Newmont and Barrick have raised their dividends a couple times. These companies are going to be buying back stock. And if we go over our earnings reports, every quarter, and these companies are all just posting blowout earnings like you can't believe. And because the cost of energy isn't that high, and with the dollar being relatively strong, foreign currency, cost of labor is low, and the margins are just, off the charts. Companies never had these kind of free cash flow multiples that we see now.
Yeah, I own some Kinross, and I've had it for a year, so I follow that closely. It's amazing the profit margins the market's not recognizing that. Are there any junior silver miners that really stand, or silver or gold miners, any exploration plays that you guys follow that you find more interesting than others, or is there anything that you really like in that space?
Mm-hmm.
So I cannot provide investment advice. I don't know any of your listeners, individual circumstances, but a couple of stocks that we do like. I mean, a bigger one is Pan American Silver. I mean, run by Ross Beatty, and he's just brilliant and has a phenomenal management team. And then I know Avanos Silver, has some great things going for it. But really, any of these miners just makes sense for the long haul. And I know the Reddit community is a number of millennials. I would say follow Wall Street Silver, closely. And you guys are doing such a great job, but I'm proud of you guys, starting to embrace precious metals, because it's real easy for millennials just to go after Twitter and GameStop, et cetera. But, the market is very, very overvalued. And you look at, I'm a value investor, and over time, the great investors have tried to invest where people, where the crowd's not there. And the crowd is not in precious metals and in precious metals equities. And therefore, investing in silver and investing in mining equities just makes all the sense in the world. And you guys are lucky in that there's having the internet. I mean, when I was investing originally, we didn't have the internet. We didn't have all these data sources that you guys have.
That must have been tough.
Oh yeah, and great podcasts of getting luminaries like Jim Rogers and on a podcast, and just being able to tune in and listen anytime. I mean, you guys are so blessed. And so, but you need to think outside the box. You need to go, as Wayne Gretzky said, don't go where the puck is, go where the puck's going to be. And it's going to be, and you look at what the Federal Reserve's doing, and you look at what Congress is doing, throwing trillions of dollars around. It doesn't take, a genius to realize, with 5,000 years of monetary history, precious metals is going to be the place to be. And one of these days, Robinhood is going to be filled with, not just Wall Street Silver, but, owning, junior mining companies.
Wait, I'm sorry. Go ahead, Ivan. I didn't mean to interrupt you.
No, it's okay. Now, David, when Wall Street Silver first started, I was looking at Wall Street Bets, and this was about 3 weeks ago. I seen them at 1 million subscribers. Next day, I seen them at 2. Third day, I seen them at 3 million subscribers. This is in 3 days, Wall Street Bets. And then I said to myself, why don't we just make a community for silver? Because if the stock market collapses, paper's not worth anything. Bitcoin's not worth anything. You can't make cars with them. You can't make solar panels with them. And then I was like, why not we make a community that's strictly just to wake up the masses on real currency? And then Wall Street Silver was created. So that's the most important thing, is we want to wake up the masses. That's our mission, and that's our goal. That's what I wanted to get out there.
You just did our mission statement. Thanks.
Yeah, there's our mission statement.
That's really parallel with my career and why I've been on, we talked about this symposium in September 1999. You know, it was covered by the front page of the Wall Street Journal the next day. When I go on TV, I like to warn about the fact that there's danger out there. You know, and I can't say when the market's going to crash, but you have to be, you know, careful and read and, you know, protect your principal. But I've never seen, you know, such a great opportunity as we've seen with, you know, precious metals today versus equities generally. And again, I'm not providing investment advice because I don't know your listeners, but you know, it's a place that you guys should look. And again, kudos to you guys at Wall Street Silver for providing this, and you know, turning the light on this kind of a philanthropic, you know, motivation to we don't want to see people get burned, and so we want to show the light, and this is a place where the light should be shown.
Well, that what you just said regarding some debt and QE issues, that leads into my next question. The Fed basically has unlimited QE right now, which is far different than last time. There was like QE1, QE2, QE3, then there was a twist in there somewhere, and that was spaced out over years. Congress is preparing another 1.9 trillion that seems like it's likely to pass within the next week or so, and they're already talking about another 3 trillion for infrastructure spending later this year. And I'm just wondering, all of this debt, it just seems so huge in relation to the size of our economy. Do you think we're approaching 150% debt to GDP? Is there a breaking point here where people just lose confidence in what's going on? I know you have to have some thoughts on this.
No, very well articulated, Jim. So the debt levels to GDP nearing 150%, you know, is unconscionable. And we've seen this movie before. And there are, it's going to end badly. And now we're throwing around, you know, $1 trillion numbers where it used to be $200 or $300 billion was big. And the monetary system is frankly broken. You know, we have the dollar, you know, reigning as world's reserve currency, and we're right now at the 50th anniversary, 2021, from when Nixon, you know, suspended gold convertibility in 1971. So, and you look at the reign of world's reserve currencies, and you know, it's essentially the U.S. is about at that stage where they've fallen. I can't see there's going to be any successor to the world's reserve currency, the dollar. It's not the renminbi, it's not the euro, etc. But I think it's likely to be some kind of gold-backed currency. I think that's coming, and Jim Rickards talks about that. I think I would bet that's coming in the next, you know, 2 to 3 years. And this is going to end badly. Just throwing, just read your history books. It has happened. You can't do this.
Now, David, we have another question.
Oh, go ahead. Go ahead.
No, I'm fine. I've asked all the questions I would like to. I really appreciate all of the time.
Awesome. No worries. So David, we have a question here from our Redditors on Wall Street Silver on Reddit. They're saying, do you currently stack physical silver? And if so, do you have coins or bars? What is it? Vintage? Like, what do you currently have?
So I have mostly junk silver. So I think it's called constitutional silver. And I would recommend that. And then also PSLV. And so I think owning silver makes a lot of sense for people.
Did you see the Jim Rogers interview we did where he pulled out his North Korean silver coins?
Yeah.
He said if North Korea ever falls, he thinks they're going to be way more valuable than the actual silver in the metal for collectible reasons. Anyways, that's a guy who thinks outside of the box, let me tell you.
Yeah, I'm pretty good friends with him, and he he's legendary, and you should, pay attention whenever he talks for sure.
Yeah. So well, I still got questions if Lee doesn't. So people often look at the last crisis, 2008 to 2011, and they expect it to be the same this time. But I'm wondering if we're making a mistake there in terms of gold. Last time, 2008, 2011, great bull run for gold and silver in that financial crisis. Are we maybe making a huge mistake to be thinking it's going to play out exactly the same way here?
Well, as they say, history doesn't repeat itself, but it rhymes. And I think that in terms of gold doing well subsequent to the crash, I think that will play out again. And I think based on how cheap these mining companies are and how much we have expanded the Fed balance sheet, we've never seen anything like this in terms of purchase of treasuries has been greater than the last 5 quantitative easing periods, and the amount of debt that we've taken on has been greater than the last 5 comebacks to recessions. So we've never seen anything like this. So gold is going to do well. I'm a little bit worried about gold stocks, even as cheap as they are, in a crash.
I don't get it why people aren't just snapping up. I mean, Newmont and Barrick at a 3.8% dividend. Seems like every producer is doing close to 2% dividends now. In a yield-hungry world, I'm shocked that these people aren't grabbing up these, mid-level to large gold producers. Just my opinion. You've already answered that question. I know that you're in those already, but in terms of the commodity super cycle, are there any plays that you're looking at besides precious metals, or any other commodities that really jump out at you that you feel you need to be, that your fund is looking at or already in?
So we are focused more on precious metals, but we are open to, other base metals such as copper, zinc, et cetera. We have a holding in a nickel company that we like. I'm like Rick Rule in that I'm a believer in uranium's eventually going to do well, and there's going to be big moves there. We think that copper, I've heard Robert Friedland talk before, and Reddit users can probably find one of his speeches on YouTube someplace, but he's a huge bull and advocate for copper, because of all the benefits. I mean, it's not quite as good as silver, in my opinion, but silver has all these benefits, not just from a precious metal standpoint, but the way it, has all these myriad of uses. But I'd say copper we like, and uranium.
Well, you know what they say about uranium: if you can't touch your highly enriched weapons grade uranium, you don't really own it. So just like silver. So one of your other interviews I saw, this was back in April, you were short equities, long gold. And that was sort of when the market was just immediately crashing in the immediate virus shutdown type of period. And that worked out well during that short period of time. Is that something are you short anything right now? Or are you avoiding the shorts right now with the Fed's nonstop printing?
I'm involved as an advisor to the Ranger Equity Bear ETF. And so it is a great play for making money in a market decline. And during the last COVID decline in February, March, April, we were up 37% or so during that period. Now we've given back all that more in the rally, but this fund does extraordinarily well in market declines because it's short very bad companies that are, have levitated to ridiculous levels. And so, but the short side is a tough market to play for sure. And I think, and it tends to be kind of short-lived. I mean, we could still have, which is what I'm expecting, a 2 or 3 year secular bear market where stocks correct a lot. And I think we're going to have some tough years ahead where shorting stocks is going to make sense again. And but precious metals equities are going to be, phenomenal plays for individuals, institutions, and as we increase exposure where, very few people own them today, it's going to obviously create stock market multiple revision.
Well, we're coming up on our 45-minute time mark here. Ivan, do you have any more questions? Or
yeah, I do. From our Reddit users, it's saying here, David, how long have you been into PSLV for? We understand that you love it and we understand that you're behind it, but how long have you actually been in PSLV for?
I've owned it for probably either in my fund or, with option contracts, for more than a year, but
okay.
I've owned it, in the past as well.
Okay.
Awesome. One other comment I'd love to make, you mentioned the movie business that I'd been, involved with. I'm actually involved in a couple of documentaries. One is called, The Bubble, and talking about, I'm a big Austrian school student, and Jimmy Morrison, who's the director, producer, is brilliant, has put together, the first film talking about how the 2008 crash developed in the housing bubble, et cetera. And we're working on a sequel to that I think is going to be interesting, that I'd love your users to watch for. And then secondly, I'm working on a documentary called Grid Down, No Second Chance. Mm-hmm. And it is about, we saw in Texas the fact that we were 4 minutes away from potentially having the power grid go down for potentially months. And I believe that our power grid is very vulnerable, and that it's not just a 1 day or 2 day phenomena, but actually having, the lights go out and the power go out for, months, even extending up to a year. If that happens, as many as 75% of Americans could die. And the fact is, we have this vulnerability, but we have foreign adversaries that target, our grid, either from something called an electromagnetic pulse attack or a cyber attack. We could suffer a solar storm that could wipe out these transformers. And frankly, if we spent the money and paid attention to this could be fixed. And frankly, we need to get people behind that effort and tell our legislators that they need to fix this and get the utilities to fix this. So
can I just ask one question, since we've switched topics to this?
Sure.
I don't know if you saw this, but Klaus Schwab and the World Economic Forum kind of came out and warned about the cyber pandemic possibility. I was wondering if you had any insight into that potential.
I'm not familiar with Schwab's comments there, but I think going back to this film, the cyber vulnerability of our electronics inside our transformers is significant. And there's something called Stuxnet, and what's happened is power grids have been brought down in the past in various foreign countries, and our adversaries know that game. And there's been discussions that we actually have malware, inside our utility systems that are kind of Trojan horses just ready to go. But this is all fixable. Our website is called griddowndoc.com if listeners want to go to it.
When are you expecting
what was the
expecting
website again?
Griddowndoc.
Griddowndoc.com.
I'll add that to the description of this AMA for our viewers. Look down in the description. I'll include a link. When are you expecting these documentaries to be ready, or do you have a release date?
No, I'd say we're 90% done with the Grid Down documentary, and we have a substantive website, and we are having Dennis Quaid be the narrator for it. And
Nice.
so
Nice.
we're, excited about that. That should be out in
That's nice.
a couple months. And then the documentary about the bubble should be out in 6 to 9 months.
We'd love to have you back when we get closer to that time frame to maybe to rediscuss how the market's changed between now and then, and maybe you can even show us a preview trailer of your documentary if it's ready at that time for our viewers. And we just really want to thank you for taking the time today, David, to join us and update us on your thoughts on all these precious metal issues. We really appreciate you doing this for us, sir. Thank you very much.
And David, before you go, do you have a message for the youth?
Well, first, let me say I'm so glad to do it. I'm big fans of you guys. So yes, I thought about that because I know you've. I've got daughters in their 30s, myself. So I would say, be intellectually curious. Think outside the box, be an independent thinker. I mean, in today's time, in terms of you've got to be very judicious with your absorption of news, because it seems like the news media is incredibly biased. And so find smart people and, listen to them and be willing to challenge conventional wisdom, as I talked about with the ketchup bottles earlier.
Well,
Awesome.
that's what we try to do with Wall Street Silver. Outside, we're a small niche community of 40,000 people, and we're disconnected from the mainstream media just so we can grab people like you and bring a message that doesn't seem to be out there in the mainstream media, having these types of 45-minute discussions, whereas the CNBC is a quick little 2-minute clip. We can really dive down and get into the details with you, people like you and Jim Rogers and Mark Faber, on topics like this. So that's why we do this.
Well, thank you so much, David, for your time. We really appreciate it. For potential investors into your funds, now your Ranger equity is traded under the symbol HDGE. Is that correct?
Correct.
And then your Moran Tice is for accredited investors, correct?
Right.
So how can they reach you?
They can reach me via, I need to set up a Reddit account.
Yeah, why not? Come on, we'll make you at the top spot.
So I'll get that set up, and then I have a Twitter account that you can find me on Twitter as well.
Yeah, we'll definitely tag you when we retweet out the launch of this AMA video
for the Twitter.
Yeah,
awesome.
You can send a message to me at griddowndoc.com as well.
Great.
Awesome. Well, we want to thank you. We want to thank you guys so much from Wall Street Silver community. We want to thank everybody on YouTube and Twitter. Thank you, David Tice, for being with us. We really appreciate it, and hopefully we can talk to you soon.
Look forward to it, guys. Keep up the great work.
Bye-bye, sir.
Take care.